Hello everybody, I'm Hutan and today I want to talk about a very powerful strategy for trading with combining two indicators together. Let's see it on chart and let's talk about the strategy on chart. Before going on chart, we should know the meaning of regular divergence and hidden divergence. These two types of divergence, we need to know the meaning to use it on chart. In bearish, if the price makes a higher high, but the indicators makes a lower high, it means we have a regular divergence. It means we have a decrease in volume. In bullish market, if the price makes a lower low, but the indicators makes a higher low, it means we have a regular divergence. And the same, we have decrease in volume. And this is for changing regular divergence means for changing the direction from bearish to bullish, from bullish to bearish. It's a sign. But what's hidden divergence? Hidden divergence is a kind of divergence that we need to understand for continue the trend. In bearish market, if we make a lower high, but the indicators makes a higher high, it means that we are going to continue to go down. But in bullish market, if the price makes a higher low, but the indicators makes a lower low, it's the same. It's for continuing or going up. So exaggerated divergence, we are not going to use it, but it's how it looks between price and indicators. So let's see it on charts. First, we need to add two indicators to combine them together and take two signals in one direction and use it for entering the position. It's a really simple strategy that you can use for entering the position. First, you need to add a stochastic and we need to go to setting and change these numbers to 533. And in a style, we don't need K%. We just need to have D line, the signal line. It's okay. And again, we need to add moving average. And for this setting, we change the color and thickness and inputs. We need it to source close and simple moving average. And the number we need is 3. Okay, so let's see some examples together. For example, we are here on chart in 15-minute time frame. And we have a higher high. As you can see, we are in an imbalance area, in FVG area, and the 50% we've touched it. But here, what do we have? We have a lower high and we have a higher high. So this means we have a hidden divergence here, and we can use it for entering the position from this point until the stochastic touch the saturation area. These two areas under 20% and above 80% is saturation area. We can stay in position until the stochastic touch these two areas. And let's see what will happen if we open a position here. For example, we're going down to this place until we touch this saturation area and the stochastic comes down like this. We can stay to touch this area. Let's have a position. I will put my stop loss above this order block candle and we can go with position. Let's see. All right, the TP touched 1 to 2 risk to reward ratio, and this was one example. Let's see another example. Here between these two, here and here, as you can see, market comes down and take this liquidity and it's ready for going up because there is nothing here that we can touch. Everything had been touched here. So we are waiting for going up. And between these two lows, we have a clear divergence for going up. So this may be for a lower time frame, but we can see it here. I'm showing this because we can use this strategy in multi-time frame and it will make our win rate very bigger than using it in one time frame. To be 1 to 4 ratio between your time frame. I will tell you 15 minutes and 5 minutes is good for making this happen. And 1 hour, 15 minutes. Make these two couples. And Here in the past, you can see we have a clear divergence between these two highs. This high is lower than this one, but this high is lower than this one. And we can stay in position to touch the saturation area. Here is enough for touching this liquidity. So here we are in continue waiting for going up. So let's see what will happen. I don't see any reason for price for coming back because everything has been touched, as I've told you before. And I will place my TP above this high and my stop here below this low. So let's see what will happen. All right, TP touched. Here is 3 examples, and I don't want this video to be more longer than this, and we will talk about all the details in more examples in live trades together. And please do the backtest, and you will be really surprised that you can have so much profit in a very simple way. Good luck.